If the sole criteria of choosing between REITs and InvITs is returns, then you can cut short and go to our overview section on the website. The link is given below. The overview page has all the historical returns and the distributions and all the returns that have been happening over a period of time. However, we sincerely believe that to evaluate an investment, it's also important to understand other factors which influence this return. Therefore, we give to you this video here which covers 4 main distinctions between REITs and InvITs. These 4 points are: number 1, legislation in the Indian context; number 2, the investing knowledge required by investors; 3, the behavior of the asset; and 4, the way the instrument earns or the earning characteristic. So before that, just a quick recap of what REITs and InvITs are. You can pause on the slides hereafter and see and recap what REITs are and what InvITs are. So the legislation in the Indian context happens to be a little different from several other countries, where a single term in other countries is used. In India, there is a differentiation between InvITs and REITs, and that's specific to India. So if you see the global perspective, REITs is equal to all realty assets. And realty assets basically include land and any development. And these could be commercial realty or infrastructure. So for infrastructure, for example, power, transmission lines and so on, there is a right of way which is land and then something built on it. So they are clubbed both together. And this next slide shows you how the whole asset class is in terms of REITs in USA are, and they are a combination of all kinds of realty assets. So next we see that if you look at it, there's a chart on the bottom which is also listing out all the REITs there, and you can see there are several different types of REITs. So if you see the last one, core energy infrastructure, that is also clubbed under a REIT, but it is an energy company. It comes under a REIT diversified. Now when you come to the Indian context, the two have been separated out, one being commercial real estate, which is REITs, and the main assets are rent generating completed commercial assets, which are mainly land and building. And the second part is the infrastructure assets, which come under InvITs. And the infrastructure assets are roads, transmission lines and so on. So in India, there are 2 separate legislations which govern the 2 things. So REITs are governed by the sebi REIT regulation, which is of course has been modified over a period of time, and InvITs are governed by infrastructure investment trust guidelines. Now both these guidelines came at the same time, and originally there were a lot of similarities and a few differences. Over time, now there are more differences which have cropped up because of requirements. As an example, debt finance limits to InvITs is different from that of REITs. Now this slide tells you that REITs have a limit of 49% as far as debt financing is concerned, and InvITs have a limit of 70%. So this really impacts the returns. So there could be higher returns because of leveraging in InvITs, but also higher risks. The second difference is the investing knowledge, or the kind of knowledge that an investor requires to invest in REITs vis-a-vis InvITs. So if you see the investing knowledge required, it depends on the kind of assets there are. This is a snapshot taken from the National Monetization Pipeline document in 2021, and it lists core assets and non-core assets separately. So if you see the core assets, which is the focus of InvITs, comprises of a number of sectors like roads, power, pipelines, warehouse, seaports and so on. So InvITs may really require some kind of a specific industry understanding, which could make an investor more comfortable. This is not the case when it comes to REITs. REITs are more into the non-core assets which comprise of land and buildings, and examples of REITs could be office spaces, shopping malls, or even residential REITs and senior living in the coming times. So industrial, so if you see, REITs would require specific knowledge to real estate and not to industry as much. So real estate is closer to its different categories as understood, residential or commercial and so on, as most investors understand. The third differentiation between REITs and InvITs is the way the assets behave, and does the asset remain with the structure of the REIT or InvIT, or it is parted with. So that's the third point. And if you see, REITs are always almost perpetual assets. So a REIT would hold land and building and then derive rentals from it and dispose it off as the time comes. Now InvITs could be perpetual, or they could revert to an owner. It depends on the infrastructure type and the contracts underlying the arrangement between the InvIT and the originating parties. See, if you see the asset behavior, as an example, IRB Infra InvIT completed a concession period of Thane BOT project, and if you see on the right hand side of the slide, there is a decline also in the collections. So net profits also fell because of that. So this could impact the revenues of an InvIT, this characteristic of assets being returned to the originator. The fourth point of differentiation between REITs and InvITs is the earning characteristic. So what is the way that REITs earn vis-a-vis InvITs? The earning characteristics of REITs is defined by steady returns, and since most of the revenues come through lease contracts with various parties, and there is a built-in clause, standard lease clause, there is a growing return as a nature. InvITs also aim at steady and growing return. However, there could be varied styles, and this would depend a lot on the infrastructure and contracts. So number one, REITs are by way of rentals with REIT contracts, and number two, InvITs are contracted or non-contracted revenue sources. An example of rental agreement is given here, where it says that over a period of 9 years, the monthly rent would be increased by 15% every 3 years. So this is like a standard clause in most commercial agreements, and REITs today being office spaces, they would have a clause something like this. Now when it comes to InvITs, there could be variations. For example, here we have the IndiGrid InvIT, where the revenues are contracted, and the center is the one where the contract is charted out, and that's how the IndiGrid people get revenues. The other example of an InvIT is the IRB InvIT, where there could be variations depending on traffic. So there are no contracts as such guaranteeing a certain or defining a certain revenue stream, but it would be based on the traffic that would be there on the toll roads of the IRB InvIT. So this could be two very big variations in InvITs also. So as a conclusion, we have these 4 points here. Number one, legislation, where we have separate legislations in India. Number two, investing knowledge in InvITs could be because of varied industries exposure. Number three, the assets in REITs is more perpetual in nature, and InvITs could revert to the originator. And number four, earning characteristics is dependent on the kind of contract. So in REITs, these are leases with growing revenues, and InvITs, there could be variations as shown.